Boy, that time flies when you're having fun. It's about that time of day again here, folks. My name is Joseph James. It's Wednesday evening, January the 9th. Welcome back to your nightly newsletter. I help new traders just like you earn consistent profits using a simple three-step trading strategy. And my plan tonight is to identify the best opportunities setting up for tomorrow's trading session. And we're covering crude oil, S&P, Nasdaq, gold, and of course, we can't forget about that mighty euro. Starting off tonight with oil in the upper left-hand corner, crude is bullish, but finished today's session at a couple levels of key resistance, which tells me to look for a pullback. And I've got my eyes on a combination of three major support levels for buying opportunities on Thursday's session. About the S&P, upper right-hand corner, S&P is bullish, but with a wide spike in channel on the chart tonight. That tells me we need to skip that next pullback, and we got to give the sellers some time to exhaust before we start buying those pullbacks tomorrow. We've got a great chart to look at tonight on the S&P, so stay tuned for that in a few moments. Nasdaq, lower left-hand corner. Nasdaq is bullish with some ugly price action tonight. As I always say, a chart that only a mother could love, but with relatively obvious chart patterns on the NQ tonight. I think we'll find it pretty easy to find some reliable opportunities for tomorrow morning. Over to the yellow metal right in the middle, bottom row. Gold is bullish and hunting for the top of this massive range we've been stalking. Did I say stalking? I mean, we've been trading here this week. But as we get higher, we start shifting our focus from one type of buy setup to a more reliable type of buy setup. So we get a small adjustment to the plan as we get closer to that big round number up at 1,300 on gold. Stay tuned for more on that in just a second. And of course, wrapping up tonight on the euro, the lower right-hand corner, euro is bullish with a spike in channel pattern. But I think the short-term trading range is the most important clue on the euro tonight, and it's telling me exactly where to look for that next pullback. Well, we had some strong moves in today's session. Got a bunch of spikes on the chart tonight, which means we got some spike in channels, we got some spike in ranges, and of course some really nice setups waiting for Thursday's session. Now, speaking of Thursday's session, I'm going to break this thing down here in just a moment. But before we jump into those charts tonight, I need to remind you, though, make sure you never miss a video by joining our mailing list. You can find the opt-in form right here on the homepage of our blog at Sideways Markets. Just give me your name and your email address. Hit that subscribe button on the right-hand side, and I'll make sure I email you every time I publish something new. And of course, don't forget, if you're not joining me tomorrow morning in the trade room, the next best option is to download all the charts from tonight's video. If you're here on the blog right now, you can find a button right below the video here in the blog that will give you the option to download all of those charts from tonight's video. If you're not here on the blog, I'll put the link in the description of that YouTube video. And don't forget, if you have any questions about anything covered in this video tonight, please remember you can post those questions in the comment section below, or you can always call me in the office. I have a toll-free phone number, and if you don't want to use the telephone, right, we got live support in the upper right-hand corner. And please don't forget, if you like what you see here tonight, please help support this channel by subscribing, and when you subscribe, hit that bell icon so you get notified every time I publish something new. And as always, it is great to be here with you guys on a beautiful, a little cloudy, a little bit rainy here. Not that bad here in Los Angeles. Hope you guys are doing great out there, wherever you're tuning in on this great planet of ours. But let's not waste any more valuable time, right? Time is money. And of course, let's take a look at, right, the session for tomorrow. Tomorrow's Thursday, January the 10th. We got a lot going on tomorrow. Let's start off here, first of all, with the global economic calendar, and you'll see why this is important in just a moment. Because on the global calendar, right, you'll notice here that we have the ECB meeting minutes tomorrow morning at 7:30 a.m. This is a big deal. This is a pretty big deal. The ECB announcements happen a couple times a year. These ECB meeting minutes are going to give us a glimpse into all the infighting, all the background noise, right, behind last month's ECB announcement. Much like the FOMC minutes that we saw this afternoon, right, you're probably going to get a relatively jittery reaction at first, but then that may produce some real strong trends or some real easy ranges after that number comes out. Now, of course, I trade the U.S. morning session, and we're opening up tomorrow at 8 o'clock Eastern time in our trade room. So we're going to have a front row seat for the aftermath of this report. If you're in Europe or Asia and you have the luxury of trading through the London session, of course, from 3 a.m. until about 7:30 a.m. Eastern time, Monday through Friday. If you're trading that, remember that's coming out right towards the end, right, of that morning session in London. So you're going to want to give it a cutoff, maybe 7:15 or so, 7 o'clock, 7:15, especially if you're trading markets like the euro, like gold, or of course the bobble, the buck, sold, the bun, right? The big indexes in Europe. So please be careful if you're trading in Europe tomorrow. If you're with me tomorrow in the U.S. session, no, we're going to obviously come in 8 o'clock Eastern time. We should see some craziness on gold and euro around that initially, but hopefully when the dust settles, we'll find either some really nice ranges. You know me, I love ranges, right? Or some nice strong trends. So I want to make sure I pointed that out for all of you London session traders or Asian session traders. Be aware of that news for tomorrow. Now, of course, from there, though, I want to shift our focus now over to the U.S. session, right? Tomorrow, of course, is January the 10th, and I want to shift our focus to the U.S. calendar now because one thing should stand out tomorrow. Lots of Fed speak, lots of Fed presidents. Remember, what is there, 8 different Fed Reserve banks or 12 different Federal Reserve banks, right? And of course, they get together 8 times a year to produce the FOMC report. We've got a Fed speaker tomorrow at 8:35, 12:40, 12:45, 1 o'clock, 1:20. And of course, the big granddaddy of them all is Jerome Powell at 12:45 Eastern time. These Fed speakers, right, we saw 3 of them today, right, are really what resulted in most of the choppiness on the U.S. equity markets. Luckily, gold and crude oil were pretty easy today, so we were able to kind of adjust ourselves that way. But tomorrow, a lot of the same stuff. We get a lot more of these Fed speakers tomorrow. So, of course, we may continue here to see some relatively ugly price action on the equity indexes, the S&P, the Nasdaq, the Dow, the Russell, right? But big concern tomorrow is Jerome Powell at 12:45 Eastern time. Now, the good news is it happens right over lunch. So the most important thing that you want to be aware of for this tomorrow is, you know, we usually trade till about 11 o'clock, 11:15, 11:30 Eastern time every morning in our trade room. We're really going to be paying attention to the condition and the personality of the price action as we go into that 11 o'clock hour tomorrow. Do not try to force stuff late in the day tomorrow because I have a feeling a lot of people are going to be tuning in to hear if he's changing his opinion, right? Because remember, everyone's tiptoeing around the fact they're going to raise rates. Today it sounded like from the Fed speakers, Bostic, Evans, right, and Rosengren, very dovish today, right? Meaning low interest rates. Most people are calling for flexibility on rates, but we got Master Yoda tomorrow, Jerome Powell, right, the head of the Fed chair, right? He's going to be the one that really kind of takes the cake tomorrow. So 12:45, remember, early in, right, early out tomorrow because of that lunchtime session. So that's really what matters tomorrow. We should have a pretty full day tomorrow with those ECB minutes coming out before we begin. Yeah, we get jobless claims at 8:30, but jobless claims don't really have much of an impact on the markets these days, right? You'll see the JOLTS report has a bigger impact than the jobless claims, right? The JOLTS being the job openings, layoffs, and transfer survey, right? So jobless claims, I wouldn't expect too much out of that. But remember, we'll be coming out of those ECB minutes, so we will likely have some pretty good activity from the beginning of the session tomorrow. One thing you do want to pay attention to also lately, we have seen most of the best setups have been happening between 9 a.m. to 11 a.m. So we'll see about tomorrow. It's like once you pick up on a market tendency or a correlation, it usually changes on you. The last couple of weeks, though, we've seen a lot of our patterns between 9 o'clock and 11 o'clock. So, we have a realistic expectation tomorrow of when the best opportunities will come. So what that means for you is just stay patient, right? If we're not getting good movement like we saw this morning, right, not seeing much move in that 8 o'clock to 9 o'clock hour, just sit tight, wait for it. We've been rewarded for great setups setups, 9:30, 9:45, 10 o'clock, 10:15. That's definitely when we're going to be getting excited for setups here tomorrow. All right, so now we get the plan for tomorrow. Again, we got Jerome Powell, my boy, speaking at 12:45. And of course, we got the ECB mini minutes coming out tomorrow at 7:30 Eastern Standard Time. All right, enough of the calendar here, JJ. Let's do this. Let's jump into these charts. Let's get some charts up and running here tonight. We got crude, S&P, Nasdaq, gold, and maybe we'll have enough time to grab that euro here before we run the clock down tonight. Starting off tonight here, first of all, upper left-hand corner. Let's grab some oil here, and let's get this oil chart loaded up for us. What do we have here on the oil chart tonight? Crude is bullish, but appears to be overextended up at this measured move. You know, the bulls have control, and they finished the session at major resistance, and of course into this very, very narrow trading range. You can see a little narrow range up there, right? So we finish up the session, nice big bull run, but you can see we're sitting right on top of that measured move up there, suggesting that traders are waiting for something, right? Probably waiting for a pullback. Because remember, most of this move came off of that news report, and a lot of professionals won't trade those news reports. So I'm sure a lot of traders are looking at this going, just give me a pullback somewhere in this big move. Just give me one more shot to get in. I would imagine a lot of buyers who took off early today ahead of that inventory report, right? They're probably hoping that they can get a pullback tomorrow. And of course, the market's bullish. My plan is always the same. I want to buy at support, and of course we had a couple really awesome support levels. One of them is just staring us right in the face on this trend line. You'll notice how I draw the trend line. I draw the trend line off the first candle of the day. In my experience, the most reliable support and resistance levels will always come off the current day, right? As opposed to drawing that trend line up like that, right? Or doing it from a previous low back there. Just the way that I see works best. You may disagree with me on that, but I like to draw everything off of the current day's information whenever I have the opportunity. So this is my first big support level here. I'd like to be a buyer off that key level of support. We also have one of my favorite levels of support. We call these naked reversal lines. You can see by looking back in time here, we go up, we pull back, we go up, and we come all the way back, right, to hit that trend line right there. But notice one thing about this example right here, right? We get that initial push up, we pull back, we go up, we come back, but we actually don't hit that, right? It missed it by just a couple ticks there. And see, what happens is when it misses that initial pullback and it misses that, right, that support level there, it'll almost always come back to, yep, right there, and you got those buyers just waiting to clobber that sucker right back up again. We have a similar situation happening right now. We go up, we pull back, right? We're still waiting. Right? We're still waiting that naked, right? That naked reversal line, right? That untouched, right? That virgin reversal line here right now, right? Whatever you want to call it here at 51.50. That's a great support level. And then wait. Oh, there is more. Absolutely, right? I wouldn't be Professor JJ without giving a little more than that, right? A little trading range up top there. And we got a bunch of these little ranges here tonight. That trading range really tells me buyers are rejecting higher prices right now, right? Because you can see they're not getting anywhere. If I take that little trading range, right, copy and paste it down. Now, we talked about this last night, right? Coming back from last night's newsletter. When it's a narrow range, I like to use the double deviation. When it's a, normal size range, I'll use a single deviation, right? We'll talk more about that tomorrow in our trading classes. But the bottom line is, look where that lines up. It lines up right at that reversal line. I mean, gosh, makes you want to print that chart out and put it right on the refrigerator, right, and keep it for next time, because 51.50 is a beautiful spot. We get that prior reversal line. We've got that trend line coming up, right, and of course we got that range expansion, right, setting up here as we go. So now we know where our key levels of support are. Now, why don't we dig in here and let's play that game, right? What if price pulls back? What if it goes sideways here? Now you know kind of the bird's eye view of this. Let's get our hands dirty on this now. So I want to buy pullbacks. Well, let me back up. I want to buy at support. I've got my key levels of support, right? I know where those are. Let's get a pullback now. Now, as this market pulls back, it's likely going to give us one of two patterns. One is going to be a two-legged pullback, which we're going to see a lot more of on the E-minis, right? A two-legged pullback, just like the name suggests, has two quite obvious legs to it. It creates a trend line coming down overhead, and that trend line becomes our go-to now for a buy off of that support, right? Not as resistance, but as support. And of course, if you're a client of mine, you're probably screaming, don't tell them about the two try. It's a two try here, right, as well. I know I'm going to give away a little too much here on this nightly newsletter, but you guys are worth it because this stuff is life-changing information. It changed my life. It'll change your life as well if you work hard at it. So that's going to be a two-legged pullback, right? Kind of the nickname for that is the 2LP, right? That two-legged pullback. That's one buying opportunity down in that support level. Another one would be, it'll look like this right here. It'll be much deeper, but it will go 1, 2, and then back up, right? It may also look like this one right here where it goes 1, 2, back up. Right? What do we call those? We call those failure setups, right? Strong move down, moving average comes over. Sellers think the market's bearish. They try to sell the pullback. You can see it there. You can see it there, right? Lots of examples of these failure patterns. And of course, once we see those sellers try to sell off the moving average, now we know exactly where their stops are. I try to put myself in the shoes of those sellers. I always tell you guys, right, my secret weapon is vitamin E, right? No, not that vitamin E. Vitamin E for empathy, right? Yeah, empathy is the key word when it comes to being a trader. Empathy, of course, right? If you're not familiar, means putting yourself in the shoes of somebody else, right? Kind of walking a mile in somebody else's shoes. So if I can see that, yeah, vitamin E, right? That's what it is right there. So we got the two try, right? Sellers try to sell off the high. Now we know where stops are, and now we can look for that nice strong signal to buy, right? It's always a signal, right? Always a signal. We don't just blindly buy. We always look for that strong signal. We'll talk more about that, right, in our trading classes. Once we get that second try and we get that buy, we don't want to buy high up here, right? We want to buy high. What do we do now? We look for that pullback, right? Get that pullback, and we'll look for that pullback pattern coming up next. So of course, we've talked about the two-legged pullback. This would be a failure setup, right? And then of course, you've got your pullback setup, right? Now, again, all of this has one requirement. We've got to pull back, right? Got to pull back off this high because I don't want to buy into this resistance because it's pretty obvious these levels of resistance are standing up, right? They're standing up here pretty well. Now, what if we don't go higher or lower, right? What if we go sideways here? What if we keep chopping around? Or, what if we go up, we go down, we go up, we go down, we go up? What if we come back tomorrow morning and we see this thing setting up for a range or a triangle? Then what do we do? Well, then what I'll do is I'm going to mark up these swings. Okay, if we get a triangle on this, it does look like this might set up here for a triangle tomorrow. If it does go sideways with a triangle, the key to a triangle is to really watch those deep, those little swings that make up, right, for that triangle. Okay, so once we find that swing, again, not much changes. We still have that trend line coming up here. We still have that gorgeous 51.50 naked reversal line, and we're still going to look for those sellers to try to run lower. I'm going to look for those bears now. Let me make this a different color here. Right? I'm going to wait for those bears to try to run lower. We'll get that moving average to come over. And again, we'll look for those sellers to try and fail, right? Failure off the moving average into a pullback to the moving average, right? That allows me now to get that, what was it again? That failure setup, right, into that pullback setup. All right? And again, it just requires to stay a little more patient. Now, another question obviously is, what if we go higher here, right? What's the plan if we go higher here? Well, I got a target zone waiting up over here at 53.03 to 53.46. We'll talk about how that target zone is calculated in our membership classes. But the most important thing right now though is if we do make a run right? If we do make a run higher, we know where that target zone is. That target zone is a major level of resistance. And now we talked about this in last night's newsletter. If we get that strong rally higher, and I'm concerned about buying high, right? If I get concerned about buying high up here, right? Or as I said last night, right? Whenever I find myself running out of open space, what do? We shift our focus from buying high to buying low, and we look for traps, right? The kind of fourth different, right, entry pattern. We talked about two-legged pullbacks, failure patterns. We talked about pullbacks, and of course, right, a trap pattern. Now, trap patterns, right? We see trap patterns all the time, but remember, the key to a good trap is momentum, right? Once we see that nice strong momentum, then you'll see everybody start piling on. And honestly, I'm not much of an order flow guy. I don't think it's necessary. But if you were to read the order book, you would see buy, right? And you'll see all these buyers just stack their orders up. And as the market pulls back, it buy, and it will go right back up, right? And so that's what's ultimately happening there, right? When the market, right, starts to make that momentum move, right? There's that fear of missing out. Everybody piles on right below the swings. It's a great setup, especially for the newest of traders. Very, very easy setup. Now, we talked about the up, we talked about the down, we talked about the sideways. All right, I don't want to leave those bears out of the picture because this whole move today happened off the inventory report. How would we turn direction? What does a reversal look like? Well, first of all, think of this key trend line as the line in the sand. So what I'm going to do tomorrow is, if I want to get bearish, I've got to get through that level, hold it, and run. Simple as that. I mean, we can talk semantics here, and what if it does this and what if that, but until we get and hold below that trend line, because I can just imagine you're going to see a couple of these. You're going to probably see a strong run, and they probably won't be able to get away from it, right? So be very careful until we can see these guys holding that trend line. And once we see that strong jump off that trend line, then I'm going to resist the temptation to chase after that move. What I'll do is I'll mark that low. I'm going to mark that low, and then I'll create what we call a hidden channel. That hidden channel now gives me a chance to sell the sweet spot, the combination of that low with the top of that channel. And if we can get a turn of events here for those bears tomorrow, where would that target be? I would guess probably back to that juicy big round number at $50 a barrel. So now we got a good plan here for up, down, sideways. Hell, even threw in some bearish opportunities for us tomorrow. Now all we need is for a good old Father Time to give us a few more candlesticks so we can get this trading going into Thursday's session. While we're waiting on him, let's get some S&P going up here right now, because the S&P, I'll tell you, some of the stuff we're seeing right now in the S&P right now, I wish somebody would have taught me what the S&P tells me tonight. I wish I would have learned this 10 years ago, because there's a couple big components on this chart right now that if you're a new trader, you can thank me later for this information. There's definitely money to be made on the S&P, but there are some, well, it looks like the S&P is trying to slip one by us. It looks like it's trying to fool us right now. Over on the E-mini, the S&P is bullish with a wide spike in channel, which tells me that momentum is going to play the biggest role in tomorrow's trading session. The bull momentum, right? Overall bullish. You can see we're definitely overall bullish here right now, right? And that overall bullishness definitely tells me to look for buying opportunities at support levels, right? Channel low, swing low, trend line low, right? So we want to find buys at support, but wait just a second. The width of this channel, right? Anytime we see a wide range or a wide channel, what does that tell me? It tells me that momentum is going to be a key. As we come off the high of this channel, this market's going to feel really bearish. And when a market feels really bearish, you can almost guarantee you're going to see sellers waiting up here above those highs. So what I have to do is I have to anticipate those sellers are going to be waiting, right, up around those highs. and play this game right along with them. So my plan here is I want to be a buyer because the market's definitely bullish right now. We saw how well they held those highs. They never gave us the good sell right off the highs today. So we kind of just waiting for this thing to pull back. They finally get the pullback. Well, now here we are, clearly confirming a bull channel. Momentum as the market pulls off these highs. I need to absorb that momentum. And you might be screaming at the computer right now saying, tell about the nested to try. Absolutely. That's exactly what we're looking to do. So the first big deal we have here right now is momentum coming off the high. And with that momentum coming off the high, we're going to want to let these sellers try a couple times before we go looking for that rally back higher. Now, there's one more thing on this chart. And again, I wish somebody would have taught me this right 10 years ago. And that is I can use that trend line now because combining this momentum to the downside along with that trend line, I can let them try a couple times and I can use that trend line right to my advantage. You know, I spent many years never even looking for that trend line, and I wondered why I was inconsistent buying off that low, right? It's because that little trend line will attract those bears, right? They're trying to sell off that trend line, and of course, I'm going to wait for them to fail and look for that buy going back up. So now you know the basic idea here. It's a big bull spike in channel. Like I told you, get a bunch of those tonight. Got a bunch of rotation here and a very strong move down here for those bears. I want to be a buyer. I want to send this sucker back up to retest those highs. As you can see here, I've got one leg, two leg, three leg, a measured move target around those highs. And of course, that lines up right around that big round number at 2,600. So we know where the bulls are probably trying to go here for tomorrow. Let's dig in here, roll our sleeves up, and let's see if we can't figure out, though, how we're going to get this baby back up to retest those highs. So as I look at this tonight, right, you can easily see, I mean, we've got that strong move down, that pull back, those buyers fail, and bam, big move down. Very easy to call this a bear market. Now, again, I'm looking to buy, but we're short-term bearish. This is why I always tell my newest clients, remember, there's a big difference between the trend and the momentum, right? There is, because we see lots of times where the overall trend is bullish, but the momentum is bearish. And so when momentum is bearish, we got to wait for that momentum to absorb and then look for that buy going back up to retest those highs. All right, enough chit chat. What does it look like here for tomorrow? We're coming off the low of that channel, right? We get a strong move down. It is a strong move down, and I would expect to see the sellers try again, probably off of that trend line. Once they try again, now I have the sellers trying once, I have them trying twice, and now I have the green light to look for one of two setups. One is going to be that, this is kind of a variation of that two-legged pullback pattern I talked about earlier, up. Again, you're going to see sellers coming in right around those highs. So you don't want to buy that breakout, right? You want to use, this is why this is where I used to lose money, is I would try to buy that breakout. But knowing that trend line's coming down, it's going to come down, it's going to make you sweat, right? If you buy that breakout up here, yeah, sometimes you'll get lucky, right? There's always an exception to the rule. But the majority of the time, though, it's going to pull back and it's going to make you sweat some bullets, right? You're going to need another pair of underpants after that thing pulls back. And if you're using too tight of a stop, you're going to lose money on that trade right before, right, it takes off and rallies higher. So, of course, that 2LP, right, that two-legged pullback, whatever you want to call that in this example, it's kind of like a three-legged pullback, but same difference. Use that trend line, right, as we go higher. That's one setup that I'm looking for. Now, what was the second setup that you were talking about, Joe? Well, if you look back here, right, look back at this example. See how it jumps up and it goes into like a little spike in channel there? That's the other one. Right? And we saw that today on gold, right? So if it does go higher here, right? In other words, if it just says, what sellers, right? And just rockets those highs here, it feels pretty frustrating. But now what usually happens in that situation is it will run up, it'll give a short little pullback, it'll go, and then this will create a spike in channel right? Just a micro version of that spike and channel, and that will give you your buys off of the low of that channel. Or if we really get a treat tomorrow, right, it'll pull back and it will trap below that spike and channel. Okay, mark my words on that one. That will probably be what we get tomorrow if we don't get the pullback. Watch that spike and channel, watch that trap. Just don't chase it, right? There's no first place ribbon for the most number of trades. We want the right trades. We want quality over quantity, right? You overtrade, the only person who gets rich is your broker, right? Your broker's going to send you a great Christmas present every year, right? But you won't have any money in your account, right, to go enjoy it. So the bottom line is that's what we're looking for here, right, on the S&P. Now, what if we go sideways here? Right? What if we go sideways? What if we spend the next, 6 hours just chopping around, trying to figure out what's going to happen? What if we go sideways here? If we go sideways, we want nothing to do with the high of this range, right? No, do not touch that high. Well, unless you're going to try to be a seller, right? You could sell that high if you want, but trying to trade that breakout is, again, there's always an exception, but that is borderline trade account suicide. If we do go sideways here inside this range tomorrow, anytime we see a range, what do? We take the size of that range, right? We copy and paste it down, find that level of support down there, and then you got it, right? 1, 2, and back up. Right? And who knows? Maybe we get lucky, we get a chance to use that trend line, right, as that 1, 2. Well, this obviously is not doing a scale right now. We'll look for that 1, look for that 2, and look to buy as we go back up, right? Let those bears try once, let them try twice, and then we'll look to buy this sucker back up. So if we do spend some time sitting sideways inside that range, we know exactly what the plan is for tomorrow. Now, of course, I've been loving on the bulls here. Let's get some love to the bears here. What would a bear market look like? Well, honestly, because momentum is already very bearish right now, if I can get a 1, 2, 3 and really get a strong run off of this move, right, I'd be happy to call this a bear market. Mark that low, mark that high, mark the high, right, and then of course look for that sell off the high of that new hidden channel. Right? Don't worry about this hidden trend line down here. If they do run lower on real good strength, right? If we do get that 1, 2, 3 reversal, then we know a little trend line down here is probably not going to stop this, right? And of course, at that point now, boy, oh boy, this could really get good here for the sellers, because if you recall, right, if I go back in time here, right, this was that original range, right? So this thing, if we get the 1, 2, 3 run, now we're looking really good to dump this thing right back into that range. You got your low of that range is an easy target there, 25.50 for the sellers here. But again, we got to wait for a little bit more information on that before we can go pulling the trigger to the sell side. Really great chart here tonight, right, on that S&P. So far, right, we've talked about the two-legged pullback, right? We've talked about that two-try failure. We've talked about pullback patterns. We've talked about trap patterns, right? We've talked about little spike and channel patterns. Boy, I want to give you so much more value here, but I got to keep going because we're already 30 minutes into this video right now. So to do a deeper dive into all of these trade setups and all the technical analysis I use, what I'll do is I'll put a link up top here with a free trading class. You'll see a little pop up there. I'll also put a big red button. That way it's easy to see, right? Right below the video tonight. Watch that big red button, grab that free trading course. Not only will I send you detailed tutorials on all my favorite setups, all my favorite technical analysis, but I'll also send you hundreds of examples of these real patterns from our trade room. So grab that free trading class, right? Definitely don't miss that opportunity. And it's okay, share with a friend. You're more than welcome to toss that link to a friend, right? That class has been highly popular with our new clients, and I know you're gonna love it. In the meantime though, got a lot to go here. Let's keep going. S&P looks pretty good there. Momentum is the key here on the S&P. How about some Nasdaq? Well, I'll tell you, as I kind of joked around earlier, the Nasdaq was definitely a chart that only a mother could love here today, right? It was a pretty ugly chart, as you probably saw, right? And of course, Nasdaq is bullish ugly, but relatively obvious spike in channel. You'll notice this spike in channel we have here on the chart. Kind of an interesting little guy. I took the spike in channel. What I did was I added the 25 and I added the 75, right, to that channel, and it's so crazy, right? Sometimes you look at this stuff, you're going, how does that even work, right? I mean, this is kind of the stuff that always kind of gives me goosebumps a little bit, because it's like, how do they figure that out? They don't, right? There's no like conductor. There's no, it's an orchestra without a conductor, and it's amazing sometimes when you look at these charts and you go, how on earth, without one person kind of conducting the whole process, how does that work, right? It really is a testament to chaos theory. It's a testament to the law of large numbers, and of course, right, the wisdom of crowds. Very, very intriguing to say the least. But the reality is, we definitely have a bull channel here, another spike and channel. Got some really interesting rotation back and forth inside that channel, but definitely a spike and channel, right, which tells me to look for that nice deep pullback, right, off that high and buy down at levels of support. Now, you'll notice that this channel on the Nasdaq isn't as wide as its counterpart on the S&P. So you can see, like right now, it does not look like a bear market, right? You go back to the S&P, right? The S&P looks like a bear market. The momentum is bearish, right? This one, we just haven't seen those sellers really stretch their legs yet, right? Like it is on the S&P. So I can definitely be a little bit more aggressive on the Nasdaq, but at the same time, it's basically the same basic plan. I want to buy the low of this channel, right? I definitely want to buy the low of this channel. I've got a battle zone waiting down here just below the low, because usually that's where the best setups come on a narrow spike in channel. When the spike in channel, it's not so wide like the S&P. Usually you'll get that deep pullback, right? And then it will rally higher, almost as if to kind of give those buyers another chance to participate. My only concern right now is that falling resistance trend line, right? Same trend line that we saw, similar trend line, obviously, we saw on the S&P. So instead of just simply buying a failure pattern here, right, what I'll do is I'll look for that nested two try. We've already talked about this on the previous chart, 1 and 2, right, and look for that buy off of that, right, off of that trend line, right? So the trend line tells me adjust the strategy. Instead of using the two try failure, we want to use that trend line, right, as support on the opposite side. What I find to be really interesting here on this chart is all the way back here. Now, if you look closely at the chart here, it actually gapped down and then raced higher. A lot of times when you see gap downs that completely fill on that first candle, right, a lot of times it's, again, a lot like we talked about on oil. People are looking at that going, man, if it comes back there, I'm going to buy everything I can afford, right? Like, people start to get really intrigued about that area, a lot like on oil, where that big move came off of the inventory report, and people will naturally be gravitated towards buying that next pullback there. This is the same basic place, right? Now, I was tempted to make this battle zone even larger. I like to keep the battle zone, right, to a try to keep it as narrow and specific as possible. But really, I mean, this whole battle zone could be all the way down to that low. So I really want to see a nice deep pullback. The trend line is really what I'm watching here right now, right? Can we get the 1? Can we get the 2? And can we get above that trend line and make it happen, right, as we go back up to retest that high? Let's dig in. Right, getting our feet wet here on the bigger picture, and now, of course, looking at this much more zoomed in here now, right, easy to see, right, there's that trend line coming down, very similar plan here we saw in the S&P. As we go lower, right, this will probably get those bears to try and sell. I'm assuming they will. Normally, I'd be buying, right? Normally, I'd be buying that failure, right? Back up here. But because there's an obvious two-legged pullback, I'm going to treat this now as resistance and try to use it now, right, as a level of support on the opposite side. If it doesn't give me that pullback, right, that two-legged pullback pattern, don't forget, if it just rockets higher here, and again, you can see a good example back here, a little bit tough to see on this slower time frame, but you can see that little spike in channel right there, right, same basic pattern you'll look for as we go higher, right, small pullback there, right, find that channel, and of course, right, that little channel pullback, there'll be another option off of that low, or like I mentioned earlier, if we really get lucky here, right, it's that trap below that low. And again, where's my target going to be? Target will be up around the high of that channel. And of course, I'm watching 1, I'm watching 2, and I'm watching 3, right, for those measured moves. Now, what if we go sideways here, right? What if we end up tomorrow, right? We're going sideways. Maybe it's a triangle. Maybe it's a trading range, right? What do we do if we go sideways here? Again, we still want to be a buyer here. What we don't want to do is try trading breakouts up here. Everybody likes to talk about trading breakouts. Sometimes I wonder when I watch these YouTube videos if they've ever actually successfully traded those strategies, because most breakouts fail, right? Most breakouts will end up coming right back down into that trading range. So instead of trying to buy the breakout here, right, instead of trying to buy the breakout up there, right, we'll do is we'll look for this failure, trying to get it down 1, right, 2, and then we'll look for that buy coming up from there, right? Let them try once, let them try twice, and we'll look to buy as we go back up into that trading range. That's if we get, right, a range bound scenario into tomorrow's session. Now, how do we turn bearish, right? Bearishness now, strong move down, pull back to the moving average, right? Now, just a strong move down does not mean we can sell that pullback. Look back over here, right? Strong move down. I mean, if you would have tried to sell that pullback, right, you wouldn't have much money left in your account today, right, as that market rallies higher. So as we see this market strong move lower, pulls back to that moving average, okay, just remember, right, you're probably going to have to see, this wouldn't normally be, this would normally be a failure here, right, but you're probably going to see a failure with a trap and another leg lower. That's probably what's going to happen, right, if it reverses. You'll see the market go lower. It'll pull back to the moving average. You'll see sellers try, but of course those sellers will run right into buyers here because, again, you've got that battle zone down here, right? And so what'll happen is the buyers will try to run it up, and then right when those buyers are beating their chests, right, they're going to run right into that trend line, and the price will just run off that trend line. Once we get that reversal, mark up that low, mark up that low, mark up the new channel, and now we have that new spike in channel. And again, none of this is drawn to scale. These are just obviously the scenarios I'm looking for tomorrow. We'll see what actually happens tomorrow morning, and we'll use this as our guide tomorrow with all of our clients in the trade room. And as always, if you want to learn more about all of these patterns, I would highly recommend that free trading course. It's right up in the upper right-hand corner in that information icon, or grab that big red button right below the video tonight here on our blog. So Nasdaq looking pretty good, relatively similar to the S&P. How about some gold? Boy, oh boy, loving on that gold here this week, aren't we? Yeah, gold, beautiful market here this week on gold. Gold's definitely hunting for that 1300, right, in the high of this range. Not much is new here on gold except for this big blast higher here. I mean, we really have been right on the scent of these bulls here this week on gold. Gold is hunting for the high of this trading range. Got a strong bull run, as you can see, as we're going higher, right? Strong bull run into a spike and channel. Here's your spike and channel as we go higher, right? That big spike into that channel. Now, we talked about this on a couple other charts, right? That little small spike and channel, right? What did we say? It's buy off that low, or even better, right? Get that trap off of that low. These are definitely going to be some buying opportunities down near the low, right? And then the market's bullish, right? Definitely bullish. So look at that reversal line there. Does that look familiar? We talked about that reversal line technique, right, on the crude. That would really be a great pullback area, right, because you can combine that area now with that kind of hidden channel. combined with that reversal line, oh baby, with that trap, I mean, this would be a dream come true if we can get that pullback. We may not get the pullback though, because it's just been so red hot here, going higher here. The most important thing, again, I want to see a pullback here to the low of that channel. The most important thing that I need to worry about, and I want to make sure I communicate with you, is the top of this trading range. Let's not forget, right? The big target right now is first and foremost at that 1297 level overhead. Then from there, it's that big round number, which lines up right around that 1301, that measured move. If I had to guess here right now, I would say that big round number has to be, right, the big carrot at the end of the stick here for these bulls. So I would imagine that's what they're trying to get to. The problem though is the top of that range. So if we keep going higher here, we got to be careful with that range. And of course, anytime we are running out of space, what do we look for? Traps, right? Traps, so we can get that buy off that trap low. Okay, let's dig in here, right? We want to look for a buy here on a pullback, because you can see we're well above the moving average right now. You know where that measured move is. That's pretty easy. Okay, I want to find key support. Key support, 87.8. Key support, 88.8, right? Key support, the low of that hidden channel. Okay, that creates this battle zone. Let's get that pullback. When we get that pullback, don't forget, keep your eyes open for that two-legged pullback, right? That buy off that trend line. Or keep an eye out for that strong move down, right? It'll look like that, right? It'll look like that, right? See that strong move down. Come back to the moving average. Wait for those sellers now to try again, right? Let those bears try to sell off of that moving average. Once we see those bears have sold into that pullback, now we know where their stops are. I can buy with a failure setup just above the moving average. And of course, with that moving average, I can stay patient. I can wait to buy the pullback, right, and run higher from there, right? Moving average comes over, look to buy that pullback, right? Failure pattern, pullback pattern, and again, we talked about that two-legged pullback pattern. Now, what if the price goes sideways here? Then what do we do? Could easily go sideways here at these highs, as buyers may start to get a little bit nervous about buying high here. What if we see a range here? If we see a range, two try failure, 1, 2, back up, right? 1, 2, back up, or maybe it's a nested two try, big drop down, right? 1, 2, back up, right? We'll talk more about nesteds tomorrow morning in the trade room. Want to buy below the low of that range. The big question though is, what if this thing keeps on going higher, right? What if we keep going higher? What if we keep grinding higher? Then what do we do, guys? We look for traps, and I can look for a combination of a trap right into the low of that channel. I'll tell you, there's not much better than a trap channel combination setup, right? Because again, we don't want to buy into these highs. We want to focus on buying at those traps. Now, what would a bear market look like? What would a bear market look like? A bear market would be 1, 2, 3, strong move down. Now, be very careful trying to sell down here, though, because look where we are. We're right down on the low of that range, right? You can go ask the bears how their selling opportunities work for them down here, right? I wouldn't recommend it, right? Not very good for our health. So we know as the market goes lower here, yeah, we might get that strong move down. But now we're back to the low of this range again, which means, yeah, we're looking for the same basic idea here, right? 1 try, 2 try, that nested 2 try, just like on the S&P, where the S&P has that big wide range. Let those sellers try once, let them try twice, right? We call this a nested 2 try, right? When momentum isn't that bad, you can take a basic major 2 try, 1, 2, and back up. Right? But when we have a lot of momentum though, right? When that momentum really screams lower like this, okay, you really got to give those bears once, give them twice, right? And then we'll usually have a trend line coming up and we can buy right off that little trend line there, right, for that move going higher here back up into that range. The only other scenario that I would be concerned with tomorrow would be if we get stuck right in the middle of this, right? So if we end up buying off of this low, but they can't go back and retest those highs. If we see this thing kind of sitting here right now, this will become the middle of that range. And again, it will be 1, 2, buy back up, right? Same basic plan, right, to buy off of that low. Just got to make sure we keep our eyes open for that trading range. So gold, I'll tell you, I've been very, very good to us this week, right? Hope you guys are doing well in that gold as well. Tomorrow, we're going to hopefully keep this streak going here on the yellow metal to finish off that range rotation. And then last but not least here, another strong move, another spike into a channel here. Right, here's the mighty euro. We can't forget about that mighty euro here every evening. Euro is bullish into a narrow trading range. It's almost so small there, it's almost difficult to even see it. The euro is definitely running higher with a strong bull momentum, which tells me to look for buying setups down at key support levels tomorrow morning. The two main clues, though, on this chart are the spike in channel. Spike in channels, narrow spike in channels, always tell us look for that nice deep pullback. I've got that hidden, right, that hidden support trend line, right, coming in as a magnet there as well. And of course, the trading range, right? It's a relatively narrow trading range. Like I said, you blink and you would miss it. It's a very small little subtle range there. But what do we always talk about when it comes to a narrow range? Add the 1, add the 2 deviations to it. It's usually going to be 2 deviations. The range is relatively small. That puts me right about there, right? That puts my major support right there. We got support coming in here. We've got prior swings here. This whole area around 15,800 to 15,700 looks like a very nice level, right? If we do get that pullback now, I want to use that 2-try failure to buy it going right back up again. So what if we go sideways? What if we pull back here? Well, we're already inside of a sideways range here. So the plan is 1, 2, buy back up, right? If we keep sitting inside the range, we'll keep sitting and waiting. 1, 2, and right back up. Now keep in mind, this could all be blown out of the water tomorrow because guess what? We get the ECB meeting minutes at 7:30 Eastern time, right? So don't be surprised if we get a little bit of a shake up, right? This range may expand a little bit here. So just keep your eyes on that tomorrow. Obviously tomorrow in the trade room, I'll be right there with you to give you some guidance on this. But again, 1, 2, we're in that range, right back up, right? Keep your eyes open for that 2-legged pullback. 1, 2, 2-legged pullback. Again, all these patterns are covered in that free trading course, right? Linked up below the video tonight and also in the upper right-hand corner of this video, right? Watch that 2-try. Watch that 2-legged pullback. If we do get that roll lower here, again, get that moving average pulling back there, right? Moving average pulls back, right? Strong move down. Let those sellers try to sell off of it. We can buy into their stops, right? Get that moving average to come up, right? And then look for that buy, right? For that number 2, right? So we got the failure set up. We got the pullback set up. This is all very basic stuff that we've talked about already here today, but applying it now, right, to that euro. What if you keep going higher here, right? What if we keep going higher? What if we go higher? Remember, the euro is definitely dollar-based right now. You can definitely tell this bullishness is coming from a weak dollar right now. What if we keep going higher here? If we keep going higher, not much changes, right? We're still waiting for that deep pullback. So if we just keep on rotating higher here, we're still waiting for that pullback, right? Get that moving average to come over. Get those sellers to try twice. And again, we'll start buying right off of that, right? Buying off of that pullback. Trying to use these trend lines if at all possible, right? But as we go higher here, we may lose sight of those trend lines. So we'll definitely keep our eyes on the prize. If we do see it rocket higher, right? If it rockets higher here and makes a beeline for that measured move, what's the plan? Traps, 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 right? Looking for those, right? Look for those buyers here on that pullback. Trap pattern, trap pattern, trap pattern, trap pattern. Pretty easy, right? If we get that strong move higher, you'll know right away it'll blitz higher there, right? And we'll look for some traps on the way up to that measured move. Careful on this euro tomorrow because, again, we got the ECB meeting minutes at 7:30 Eastern time. Gold and euro are definitely going to be on our radar tomorrow early because of the ECB meeting minutes. Wrapping things up here for tonight, don't forget, if you want access to that great free trading trading class. It's linked up in the description of this YouTube video. You can also register as part of our free trial and get your hands on that free trading course as well. The links are in the description of the YouTube video. If you have any questions, right, call that toll-free number. Hit me up on live support. And don't forget, you can learn all about our 3 levels of membership right on the homepage here at School of Trade. Excellent, excellent Wednesday. I'm looking forward to the great day tomorrow. Will I see you tomorrow in the trade room? Hope so. 8 o'clock Eastern time. Be there tomorrow. If not, we'll come back and do it again tomorrow night for our next edition of our nightly newsletter. My name is Joseph. Be well out there, will ya? Be nice to each other, and we'll see you next time. Adios, amigos. Bye-bye for now.